So last week we started this one, right? So graphical approach to CVP analysis. So I explained why graphical approach is important. And we talk about break-even charts. So that is traditional approach and contribution approach, right? So I asked you to draw these lines. And also we prepared contribution break-even chart also, right? Because in this traditional chart, so there is a weakness. So what is the weakness of traditional break-even chart? I explained last time. What is the issue of traditional break-even chart?
Can't show contribution.
Yes, it doesn't show the contribution. So that's why we move to contribution break-even chart, right? So therefore, this is very important. So you can easily show the contribution from this chart, right? So due to the weakness of traditional break-even chart, we prepared contribution break-even chart, right? Then we prepared profit chart also. So in profit chart only you have to draw profit or loss line. Only profit or loss line is drawn in order to identify the break-even point. So we discussed this question and we prepared the profit chart like this, right? Okay. So we covered up to this point, and today we have to start this topic, right? So this is profit chart and product rate, right? So here the importance of this section is because until this point, right? So you prepared traditional break-even chart, then contribution chart and profit chart. So assuming that we are producing only one product, right? So you prepared these charts assuming that you are producing only one product, right? But now the case is different. So you are going to prepare different types of products. So if you prepare different types of products, maybe in constant mix, right? So how you decide the break-even point, combined break-even point of all these products, right? Because for an example, so most of the companies, so they don't produce only one product, right? So maybe parallelly they produce different types of products, right? So therefore, you have to find out, so if they produce different types of products, so how to decide the combined break-even point. So for an example, so in a for an example, we'll say this cup, right? So this cup, this is a one product. So maybe you can produce a smaller cup, right? So maybe you can produce a different design cup, right? At once, right? So then, so you are producing three types of products at once. So you have to decide, so what is your break-even point if you produce three types of products at once, right? So therefore, this is the process that you have to follow, right? First, you have to find out CS ratios of each product, right? CS ratios of each product. Then you have to determine the priority ranking, right? Based on the CS ratio, you have to determine the priority ranking. Then accordingly, you can draw the graph, right? Clear? So these are the steps that you have to follow. Clear?
Yes, madam.
Then let's look at this question. So it says a firm is producing three products, namely X, Y, Z. It has a fixed cost of 50,000, right? So here you are given sales in 1,000, but in rupees. So that means sales value. Then variable cost also in rupee value in thousands, right? So you are producing X, Y, Z, 3 products, right? So you are asked to prepare a profit chart and calculate the break-even point if the company is producing in most profitable way, right? So that's mean you have to find out, so which product gives you the highest contribution, then that one you produce first. Then second contribution, right? Secondly, what is the product gives you a higher CS ratio, then you produce secondly that product. So likewise, you have to give the priority rankings, right? So find out, so apply these steps, right? So first you have to find out contribution to sales ratio, right? Contribution to sales ratio, this one. So sales, you have sales, variable costs, then you can easily find out contribution, then find out the CS ratios, find out and tell me. So it is easy if you write your calculation, when you do your calculation, write like this way, X, Y, Z, horizontally you write, then here you write sales, then variable cost, then contribution, then CS ratio. So likewise, write down, find out. So tell me CS ratios of each product. So you have to work with me, right? So because we have to follow different steps, right? Step by step, we have to draw the graph, right? So therefore, you have to work out with me, right? So please don't uh, keep quiet, right? So you have to do your workings, right, in your own, otherwise you won't learn, right? Once you finish, tell me. So first one, okay, 20, 50, 42, 20, 50, 42. Okay, right. Others, right. Okay, so that's correct, right? So what you have to do is from 150, you have to deduct 120, then you get 30, right? So 30, you have to divide by sales 150, and as a percentage, you have to show it, right? So now, as you mentioned, right? So in the chat box, right? So X is 20, Y 50. So approximately we can take Z 42, right? X 20, 20%, Y 50%, right? Z 42%, right? So these are as a percentage, right? As a percentage, everything. So these are the CS ratios. So now what is the next step, right? So the next step is determine the priority ranking, priority ranking. So you have now CS ratios. So you have to determine the priority ranking. So in this question says, you have to prepare the profit chart, right? And calculate the break-even point if the company is producing most profitable way. So the most profitable way means, so what product, right? So the which one gives you the highest CS ratio. So that means, so this gives you higher CS ratio. So you produce this one first. Then secondly, this. Thirdly, this. So that is what explained here. Determine the priority rank. Okay. So write down this one. 3, 1, 2. So this is your priority ranking. Now you can draw the graph, right? So as you know, so now what you have to do is you have to decide the scales, right? So here you have sales in rupees, right? So when you draw a profit chart, so like this, you know, profit chart is like this. So this side profit, this is loss, this is zero. So decide up to which level you have to write the scales, up to which point. So what is the maximum point you have to write the sales values?
150.
150. So that is only for X, no? That is only for X. Never. How much the maximum point should be? Others? මෙතන මේ අන්තිම පොයින්ට් එක කීයක් විය යුතුද? දැන් ඔයගලන් graph එකක් හදනකොට ඒක තේරුම් ගන්න එපා. නැතුව නිකන් scales ලියන් යන්න බෑනේ. Yes. So Nirosha says
150.
it should be 250 because when you get the total, right? So that the total cumulative amount is 250. So therefore, up to 250, you have to mark your graph, right? So beyond that, you don't need, right? So therefore, draw a graph, right? So this side, right, 10, 20, 30, 40, 50. So this side also 10, 20, 30, 40, 50, right? So that is your profit or loss area, right? Loss areas. So this side, sales in rupees, x-axis sales in rupees. So write down 25, 50, 75 like that. This axis, right, 25, 75, sorry, 25, 50, 75. So likewise, go up to 275. So you should have, right, the correct scales, right? Correct scale should be there, right? So use a ruler and draw the map. So once you finish, tell me so you have to sketch the graph with correct scales. Okay, so now we'll start. So this is the calculation which we did earlier, right? So we found CS ratios and we decided these are the priority rankings, right? So as I mentioned earlier, so you have to draw a graph with correct scales. So first we will start in this graph. So if you draw a graph like this, so this is 0, right? So at 0 level, so this side sales in rupees. At 0 level, what is your profit or loss? At 0 level, what is your profit or loss? Yes, loss of 50,000 because loss of 50,000. Yes, correct. So here it says your fixed cost is 50,000. Your fixed cost is 50,000. So that means, so even though you don't sell any unit, you have to incur that fixed cost. So that is your loss, right? That is your loss. Fixed cost equals to loss. So therefore, you have to draw first this point, right? Make a copy කරන්න එපා දැන් මං කියන step එකෙන් step එකට මේක අඳින්න, right? So first is when you don't sell, right? So at this point you don't sell any unit. So at this point your loss equals to 50,000, right? So draw that one only. Okay. Then the next step. So next, so Y gives you highest contribution to sales ratio, 50%. So therefore, you are going to draw Y's position. So Y sales equals to 40,000 rupees. So decide here, right? So decide the correct position of 40,000 in your graph and decide what is the profit or loss at 40,000 sales level. So tell me at 40,000 sales level, what is your profit or loss? Tell me what is the profit or loss at 40,000 level. Yes, there are answers. 30,000 loss, 30,000 loss. Okay. Right. So let's look at whether it's correct. So at 40,000 level, so you have a contribution of 20,000, right? So now, right, so at this point, you have a loss of 50,000, right? So you marked it, 50,000 loss at zero level, right? So therefore, right, therefore, so you have to cover this loss by using this contribution, right? So you have a loss of 50,000. So that loss you have to cover from this 20,000. So when you cover this 20,000, so still you have a loss of how much? 30,000, right? Make adu korot peenawani 30,000 loss එකක් තියෙනවා. So therefore you have to mark at 40,000 sales level, your loss will be 30,000. මේ හරිය වගේ loss එක mark කරන්න, right? So that is your first point. Clear? So at the beginning, you have a loss of 50,000. So this 50,000 loss, you can cover from Y's contribution. So once you cover 50,000 loss by Y's contribution, still you have a loss of 30,000. That one you have to mark here. Clear? Others clear?
Yes, madam.
Yes.
Yes, madam.
Then we'll move to the next one. So secondly, you produce Z, right? So this one you produce. So Z's sales equals to 60,000. So how do you mark 60,000 in this graph? At which point? Make up 250 වෙනකන් යනවා. So you mark 25, 50, 75. So likewise, you marked up to 250, right? Sales in rupees. Okay. So tell me where you are going to mark 60,000. So you marked 40,000 here. You marked 40,000 here, then 40,000, 50,000, then 60,000. Right? So can we mark 60,000, right? So can we decide you said sales at this point? Can we, yes, can we decide you said sales at this point? Give me the answer for that. Can you mark profit or loss of Z at this point? 60,000 කියලා ඔයගලගේ graph එකේ තියෙන තැනින් අරගෙන mark කරන්න පුළුවන්ද? Why? Why we can't? Why we can't mark it at this point? Yes. So Madhava says it should be cumulative value because the gap should be 60,000. So already you have marked 40,000. You have to add 60,000 to 40,000 and decide the sales point. So then if you did add 60,000 to 40, then it should be 100, right? So at 100 level, you have to decide the profit or loss, right? So that is the first point. Then now you have to decide the profit or loss. So what is the profit or loss at 100,000 level? So 100,000 ආවේ 40,000 වලට අපි 60 එකතු කරනවා. Gap එක තමයි 60 වෙන්න. Right? Okay. So what is the profit or loss at this level? Yes. 5,000 loss. So now you know you have a loss of 30,000, right? Loss of 30,000. So this loss you can cover by this contribution, its contribution, right? So once you cover this loss by this contribution, right? So still you have a loss of what? 5,000, right? So still you have a loss of 5,000, right? So that one you have to mark at this point. 100 කියන තැන mark කරන්න 5,000 මේ හරියේ වගේ loss එක. Right? So you can see this is 50, this is 30, this is at 100 level 5,000. Right? Mark that one. So using ruler, you have to mark here to here and then here to here. Okay? Okay. So now we completed this one and this one. Then finally X. So X sales equals to 150. So in this graph, where should we mark it? At which point can we mark at 150? Can't. So we have to mark it at 250. So you have to add 150 to this 100 and at 250 you have to decide your profit or loss. So decide profit or loss at 250. How much? Yes, 25. Nirosha says 25, right? So, okay, right. Profit 25,000, correct, right? So now you have, right? So now you have 5,000 loss. Then X contribution is 30,000, 30,000. So using this 30,000, you can cover this loss, 5,000. Then you get a 25,000, 25,000 profit, right? Using this contribution, you can cover this loss. Then you have a profit of 25,000. So that one you have to mark at 250. Your profit is 25,000, right? So this is 25,000. Then using a ruler from here to here, you can mark it. So decide, so clearly you have to write this one as sales in rupees, thousands, right? Sales in rupees, 1,000. Decide profit, decide loss. Right? So now you mark these points and you already prepared these lines, right? But to decide the combined break-even point, right? Combined break-even point, what you have to do is you have to take the minimum point and the last point, not the maximum point, and the last point, and you have to take a ruler and draw the line. Because sometimes you may get a point like here, right? So then this is not the last point. No? So this one is the last point, right? So like this, you will get a point. So then you have to take a rule and mark here to here, right? So that's why I told you, you have to take the minimum point, right? The minimum point and the last point that you marked on your graph, right? Then you can decide, right? Okay, so then once you draw the line, so the point at which cuts the x-axis, so this is your x-axis, decides the break-even point, right? So when you draw a line, so point at which cuts the x-axis gives you the break-even point, right? Clear? Clear?
Yes, madam.
Okay. So now, so tell me, another point is, so you can check your answer using equation approach, right? So whether this is correct or not, you can check. So you know how to calculate the break-even point. So fixed cost divided by combined CS ratio. So fixed cost is 50,000. So how to decide combined break-even point? So you have to take all sales, then that is 250. Then all contribution 50, 75. So you can decide the combined CS ratio. 75 divided by 250 has a percentage, you get 30%, right? So you will get a same answer if your answer is correct, right? If your graphical approach is correct, so you will get the same answer from the equation approach, right? So you can check the answer as well. Okay, so that's all for combined profit chart, right? So when you produce multi products, right? So then you can decide the combined break-even point. So keep in mind that you can draw this one, right? Assuming, so this is the ascending order, right? Again, you can draw the same thing using descending order, because here we prepared the chart because the question says, so you have to draw it in a most profitable way. So therefore, we started from highest CS ratio. But you can draw this one and the other way also. So from lower CS ratio to higher CS ratio, right? So then you will get, so your graph will be the other side, right? So your graph will come like this, right? So likewise you get, but when you mark these lines, the same line, right? So when to prepare the, so to decide the combined break-even point, so you have to mark the minimum point and last point, no? So then you will get the same point. So you will get the point like this. So when you prepare the other way, right? So I can't exactly draw it. So using ruler, you can draw. So you will get a graph the other way. But the combined break-even point is same, right? Clear? Got my point? පැහැදිලිද ඔයගලන්ට? ඒ කියන්නේ සමහරක් විට ඔයගලන්ට අනිත් පැත්තට අඳින්න කියලා එන්නත් පුළුවන්. Right? Okay. So tell me, so why we took sales in rupees here, right? So when you prepare a multi-product situation, so you have to take rupee values, right? Sales in the total revenues, sales in rupee value. Why? What is the reason? What is the reason? What is the reason? Can you tell me the reason why we didn't take sales units? Sales units. Yes, price and quantity are different to each product. Right, correct. Right, so because you can see when you take these figures, right? So the price of, so you don't know the selling price per unit, right? So maybe selling price of X is different from this, right? And also he said maybe another figure, right? So for an example, we'll say X is 100, selling price per unit X 100, Y 80 rupees, he said 60 rupees, something like that. So then the selling price per unit is different and the sales quantity is also different, right? So if you take sales quantities, it doesn't reflect the real situation because you have to find out the combined break-even point as a rupee value. So the product mix and selling prices are different. Product mix and selling prices are different. So therefore, to draw the multi-product situation, so always we take the sales in value because selling prices are different, sales quantities are different, right? So that is, keep in mind that point, right? Okay, so this is for your homework, right? So as I mentioned earlier, so sometimes you may get the negative contribution, right? So here positive, but here negative, right? So please prepare profit chart and calculate break-even point, right? Clear? So this is for your homework, right? Okay. This is also in most profitable way. So you have to start from higher CS ratio. Okay. So now let's move to marginal costing and management decisions in short run. So you know, concept of marginal costing is useful in making managerial decisions in short run, right? So at the beginning also I told you CVP analysis is mostly used for short run decision making, but sometimes we take strategic decisions also using CVP analysis, but basically you do short-run decisions using CVP analysis, right? So there are 4 types of decisions, right? So when there is a limiting factor, accepting a special offer, dropping a loss-making product, and make or buy decision, right? So there are 4 types of decisions, right? So the last time I asked you all to make a groups and do the presentation today. So let's start from first group, right? First group, marginal costing when a limiting factor exists, right? So first you should know what is a limiting factor. So limiting factor means, so you cannot expand your organization as you wish because there are certain limiting factors. Maybe you don't have enough funds. Maybe you don't have demand for your product. Maybe you don't have skilled laborers. Maybe you don't have quality materials. So those factors limit your production, right? So those factors limit your production. So therefore, limiting factor means the factors which limit the expansion of your organization or making unlimited profits, right? So that is limiting factor. So as I mentioned, so these are the examples, right? Factors which limits indefinite expansion of an organization or earning profits are called limiting factor. So when there is a limiting factor, so you have to follow these steps. Ascertain the contribution per limiting factor, list the order of preference, right? So the first group, so can you do this one? So first group, so are you ready? So I'll stop share. I'll stop share. So from someone should share the slideshow. So I told you to use a 1 or 2 slides to explain it. Okay, so who are the members in your group? So everyone is present. Okay, Dilki, Chamini. So everyone should show me the group members, right? So others also, if you didn't prepare this slide, so quickly prepare this slide. So I don't need full name. So just first name is enough, right? Ishanika, Dilrukshi, okay. Nipuni, Nirosha, Iresha, Anuki, Geetma. Okay. So can Anuki present the first part? Anuki,
Okay, madam.
so you have to talk loudly. So your sound is very pale. I can't hear you.
Can you hear me, madam?
Yes, I can hear now. So go to the presentation mode, right? Go to the presentation mode. So click this one. Okay, right. Okay, so you explain when labor hours are limited. When labor hours are limited, how to decide the production mix. Okay, right. You can start. So go to the first slide. So explain the first slide also. Yes, this one. Yes. So the first step is.
Good morning, everyone. I'm Anuki Kharivasam from Group 1. So let's first look.
Can you switch on your camera, please? I can't. Anuki, can you switch on your camera?
Madam, at the moment, I'm unable to switch on the camera.
Why? Yeah, you.
I'm not properly dressed.
Ah. So when you do a presentation, so you must dress properly, right? So I don't need pageants, ties like that, right? So anyway, keep in mind, so you have to switch on your video camera. So others, so remember that you have to switch on the video camera, right? Okay. So please present. For today, I'll give an excuse, right? Okay.
Okay.
Right. Okay. Yes. Start.
So limiting factors can be simply defined as the factors which limits the definite expansion of an organization or earning profit. So let's say such as finance, sales, raw materials, skill, labor, etc. So when the decision making process, we should not be based on the contribution per unit. So it should be based on the contribution per limiting factor. So if there is a limiting factor exceeds, so we have to follow main three steps basically, where the first step is ascertain the contribution, which means selling price minus variable cost. And the second step is ascertain the contribution per limiting factor, where we have to divide the contribution per unit by a limiting factor required per unit. And the third is the final step, lists, lists the order of preferences. So you can clearly see those main steps in the first slide. So let's move on to the next slide. In slide 2, we can basically see the question when the labor hours are limited into the 50,000 hours. So, Madam, shall I explain this slide also?
Yes, labor hours you can explain how you
Okay.
decide the production mix. So the first step is contribution per unit. So then
Yeah,
secondly, you have to decide how many labor hours required to produce one unit. So those things you have to explain.
yeah. In the first scenario, since the limiting factor is the labor hours, no, so we can divide contribution calculated above by labor hours per unit as mentioned in the slide. So you can clearly see the steps, calculation steps in the slide. So product W X is a W Y are in the product column. So they are in the order in the rank 1, 2, 3, 4. So finally, we have to rank them accordingly, and then we can have to calculate the total labor hours in line with the maximum demand. So while making sure that the 50,000 labor hours are met. So therefore, we can only meet those demands of only the products like X, Z, and W. So that's why we have colored the X, Z, and W the demand columns in the orange color.
Okay. Right.
Thank you, ma'am.
Okay. So then show me the group members' names, please. Okay. So Nirosha, can you do the next one?
Good morning, everyone. So this is the second scenario where we are given that materials are limited to 110 kilograms, 110,000 kilograms. So basically, we follow the same steps as explained by Anuki in the previous section. So we have, as the first step, we have calculated the contribution per unit. So W.
Nirosha, you switch on your camera, please.
Ma'am, Can I do it off camera, ma'am, if it is possible, please?
Yes, it's possible, but keep in mind when you do
Next time, yeah.
presentation next time, so you have to do it while switch on the camera, right?
Sure, ma'am, sure. Sorry for the inconvenience, madam. And we'll move on to the product X. We have calculated contribution per unit as 8 and 16 and 14. Then we as our limiting factor is materials, the second step is to calculate the contribution per material. So we have this material required per unit 6, 18, 10 and 12 for each product. So basically we have calculated the contribution per material. So then as the third step, we have ranked the contribution which we calculated. So Y has become the first in order of ranking, and W, then Z, X has become the last factor, which last product which contributes least. So it is shown in the second table where the ranking and the products. So then accordingly material per unit consumed, we have highlighted the demand where we can go up to maximum demand. So then the total material usage will only be limited to 3 products as per the limiting factor. So we'll be producing Y, W, Z, 50,000, 30,000 and 30,000 each.
Okay. Right. So you all presented it clearly, right? So answers are clear. So please stop share.
Thank you, everyone.
Right. So keep in mind, everyone, so when you present, so every day, so you have to dress properly, right? So even though it's online, so sometimes, so even I didn't give you an assignment or an activity, so you have to dress properly, right? So sometimes we will ask you to answer opening your camera, right? So switching on your camera. So therefore, please keep in mind that one also. So other groups, so you have to switch on the camera and do the presentation, right? So therefore, please prepare, right? So let's look at the answer for, so your presentation is okay, right? So the answers are correct and you all presented well, even though you didn't switch on the cameras, right? But for others, sake, right? So I'll also explain the calculations, right? So how to do it. Okay. So hope you can see the Excel sheet, right? Can you see the Excel sheet?
Yes.
Can you see the Excel sheet, please? Tell me whether you can see the Excel
Yes,
sheet.
ma'am.
Yes, okay. So this is the question. So I'm talking to the other students, right? So maybe the students who have did this activity, so they have understood, I think, very well, right? Because they work out it, right? So this is the question, right? So you have 4 products, right? So selling price is given, then the labor cost, material cost, and maximum demand, right? And also here it says the labor hours, you have only 50,000 labor hours, and materials also you have only 110,000 kilograms, right? Then we have to decide the production mix if we have 50,000 labor hours. So that is our first question, right? So then we have to do like this. So when labor hours are limited to 50,000 hours, so first you have to decide the contributions, right? You have to calculate contribution. Then you have to find out how many labor hours you need to produce 1 unit of W, X, Y, and Z, right? Right? So therefore, you decide 3, 2, 7, 5. So how did you decide that one? Because here you can see this is the labor cost per unit. So this one you have to divide by 2 rupees because labor hour is per labor hour cost is 2 rupees. So therefore, to decide the labor hours, you have to divide it by 2, right? Then you get 3, 2, 7, and 5. So 3, 2, 7, and 5 are labor hours, right? So that's why here 3, 2, 7, 5 labor hours per unit. Then you can decide the contribution per labor hour, dividing contribution by labor hours, right? So these are the figures. Then you give the priority rankings, right? So because labor hours are limited to 50,000, so using labor hours, you have to decide the production mix. So therefore, you have to first decide, so which product gives you highest contribution per labor hour. So then you decide based on that, the priority rankings. So you can see you get 4 rupees per labor hour in X. So this is the highest contribution that you get. So therefore, you produce this one first, then secondly this, thirdly this, and finally this. Right? So you can see how you decide your priority ranking. So if labor hours are limited, so you have to decide, so which product gives you highest contribution per labor hour. Then you decide the priority rankings, right? So now you can decide, so X first, then second Z, then thirdly W, finally Y. And also in the question, it says the maximum demand for each product is 5,000. So therefore, maximum demand is 5,000. So when you produce X, maximum demand is 5,000. But here write down the maximum amount of labor hours available to you, right? Then you can decide how many labor hours you need to produce 5,000 units. So in X, you know, you need 2 labor hours. So that's why you multiply it by 2 to get the labor hours. Then secondly, you go to Z, right? Z's demand also 5,000. So to produce Z, you need 5 labor hours. Then you get 25,000. Then you go to W. Thirdly, it gives you highest contribution. So 3 labor hours you need. You multiply it by 3. Then when you add, you can see, so you have already used this 50,000, right? So therefore, you cannot produce from Y. So you have to answer, right? You have to write your answer like this. When labor hours are limited to 50,000 hours, our product mix will be X 5,000, Z 5,000, W 5,000, right? So that is the way you have to write. This is the first part. Then the second part is materials. When materials limited to 110,000 kgs, right? So same thing, you have to find out the contribution. So from here, you can take the same figures. Then the next one is your limiting factor is materials. Materials are limited to 110,000 kgs in a period. So now you have to decide how many kilograms you need to produce 1 unit of W, X, Y, and Z. So here, this is material cost, right? To produce 1 unit of W, you need 6 rupees. But now you need how many kilograms you need. So therefore, you have to divide this by 1 rupee. So you will get the same figures, right? 6, 18, 10 and 12. මොකද එකෙන් බෙදපුවාම එකමනේ එන්නේ, right? So you will get same figures 6, 18, 10 and 12. Then you get contribution per material kilogram, right? Then priority rankings you can give. So because this gives you highest contribution per material kilogram, so you produce this one first, secondly this, thirdly this, likewise. Then same thing. So now you know the priority W first, second, sorry, Y first, W second, Z third. So you can write here. Then maximum demand, Y 5,000. To produce 5,000, how many materials that you need? Material kilograms that you need, right? So Y, you need 10 kilograms. So you have to multiply it by 10. Then secondly, you go to W, maximum demand 5,000. W, you need 6 kilograms, multiplied by 6. Then you go to Z. So if you take 5,000 here, Z's, you need 12 per kilogram, per unit. So therefore, 5,000, if you multiply by 12, you get 60,000 here. Then 60 plus 80, so you get 140 here. So you don't have 140 kilograms. So therefore, what you have to do is, you have to deduct 80,000, this one and this one from this and get the balance. And then you can decide by dividing by 12, how many units, right? So that's what you have to do. Clear? So then the answer will be, when materials limited to 110,000 kilograms, product mix will be Y 5,000, W 5,000, Z 2,500, right? So those are the steps that you have to follow. Clear?
Yes, ma'am.
Questions? Others? Other groups? So we have 39 students today, right? So normally we have around 50 students, right? So it's 11 missing. Right. So let's move to the next one. So the next one is acceptance of a special order. Acceptance of a special order. So first you should know what is a special order. What is a special order? So special order means, so for an example, so you have a business, right? So that is your normal business. And so you are manufacturing a product under the normal conditions. But when you do your normal business, so you will get a special order from outside, right? So the special order is different from the normal business, normal production process or the normal production conditions, right? So maybe the prices are different, right? So the special order price may be different from the normal price. Then maybe to produce the special order, so you may need additional fixed cost, right? So maybe the design is different. So you know special order is a kind of a order which differ from the normal business. Differ from the normal business. Under special conditions, you accept that special order, right? So that is the first thing. And the next one, whether you accept a special order or not, decide by comparing the special order price and the production cost, right? So you know, under the normal conditions, so you use certain materials, labor, certain expenses, right? You know the production cost. So you have to compare the special order price with the production cost. So production cost is something different from other things, right? Because under CVP analysis, we divide our total cost into variable and fixed. So in CVP analysis, contribution is very important. So therefore, acceptance of a special order decides by whether the special order gives you a contribution or not. Whether the special order gives you a contribution or not, right? So that is the criteria which decides whether you accept or reject a special order. So the first one is you should know what is a special order. Then the second one is whether you accept or reject a special order decide by whether the special order gives you a contribution in one hand. The other one is, I forgot to tell you, other one is whether you have an excess capacity to offer that special order. Because for an example, under your normal condition, right, under the normal business, if you use your fullest capacity, you cannot accept a special order because now you are using your 100% capacity for your normal business. So to accept the special order, first thing you have to decide whether there is an excess capacity to accept the special order and how much it is. And the second point is whether the special order gives you a contribution, right? So those are the fundamental criteria that you have to decide whether you are going to accept or reject a special order, right? Okay. So this is the question. So second group, so shall we present it? So after that, I will explain. Second group. Udani, Inali, Madhava, Samarapur, Ayantika, Taraka, Rumesh, Dushanti, Asantika, Imesha. Okay. So I will ask two persons to explain, right? So Madhava and Rumesh. So Madhava, you can start.
Okay.
Switch on the cameras, right? Switch on the cameras.
Am I visible and audible?
Yes, Sudha. Okay.
Yeah. Madam, first of all, I need to say that because of the annual reports and all, I was really busy, but I couldn't join to the group. And sorry, group, that I couldn't come for this slide presentation. But I can explain. I'll explain this. Can you move on to the next slide, please?
So you can explain the first part and we'll move to the other one next, right?
Yeah. Then our question is the X Limited, the special order, they are getting a special order in their capacity. They are now producing 80%. The 20% they are have a excess capacity. That means it's not used. So we can consider two things in here. One, the present capacity and the fixed cost. The second one is spare capacity and the incremental cost benefit. So here 80% of this capacity we are still in a profit making situation. Now then we have going to utilize another 20% which are with our own brand. So when we consider the selling price, the variable cost and all, so contribution is still plus, and the fixed cost is in a fixed slab. That means even though we are utilizing this 20%, it won't go to the next level of the fixed cost slab. So we are getting that advantage, and when we are utilizing 100% of our capacity, so the expected profit per month getting another 300,000 addition for a month. For the year, expected profit is going to get up with the 3.6 million. So based on that and the brand name, and also we decide to utilize the next 20% of the spare capacity.
Okay. So,
Shall I explain this slide, or the next person can?
who is the other person that I mentioned?
I'm here, Madam Ramesh.
Yes, so Ramesh can continue from that part. Ramesh,
Am I audible and visible, Madam?
yes, yes.
As Madhav explained, we decided to accept this order. I mean, the company decided to accept this order based on these criteria and factors. So the company is running at 80% of capacity. So there's another available capacity of 20%. So we can utilize that capacity to produce this special order. So that means the fixed cost is remain unchanged. So we have to only consider only incremental cost and incremental revenue. So the second point, so as I explained, so companies generating incremental revenue higher than the incremental cost. So it is a additional income for the company. So the company can accept the order. So then, as I explained, fixed cost is remain unchanged. That means it is not exceed the present capacity. Finally, we consider qualitative factors as well. This is going as their own label product. So
Ramesh, you can stop. So I will ask other student to explain the qualitative factors. So show me the names. Plus,
okay,
thank you, Ramesh.
okay.
Uh, Can Udani explain the qualitative factors, other factors? Udani?
Yes, ma'am.
Okay. So what are the other
As we con-
factors that has to be considered when you accept this special offer?
as this special offer going to the supermarkets with the own company label with the low rate of price that so it will be the qualitative factor for the company. The normal price is 20 rupees that we are launching this new product, new special order as the 13 rupees for the supermarkets.
Only those 2 points?
Yes, madam.
Okay, right, okay, good. Right, so you can stop share this one. Okay, thank you for your presentation, right? Okay, so this is the question you have, right? So their calculations are okay. But when you present, I think it's better if you could compare, right? So if you accept so all these things I saw in the presentation, but the explanation is not enough, right? So not in a, I mean, because one student told he didn't involve with this activity, so maybe that is the reason. So when you present, at the examination, right? So you have to clearly present because this is strategic management accounting, right? So in management accounting, so presenting your calculations is very important, right? So presenting the calculation is very important, right? So because you are going to take decisions using those information, right? So therefore, you should not give lot of information from a one slide, right? So you can only present the most important things, right? So what you have to specify here is, right? So first we'll look at the question for because other students may not have read this one. So we'll try to read the question first. So X Limited manufacture and market, right? A drink which they sell at 20 rupees per bottle. The current output is 400,000 bottles per month, which represent 80% of capacity, right? So this part they explain. So they explain the current capacity is 80, right? So therefore they have an excess capacity of how many bottles? How many bottles excess capacity? Because here 80% equals to 400,000 bottles. So 20% is 100,000 bottles. So you have a 100,000 bottles excess capacity, right? So they have the opportunity to utilize their surplus capacity by selling the drink at 13 rupees per bottle to supermarket, which will sell it as an own label product, right? So under the normal conditions, so you sell your bottle at 20 rupees per bottle. But under the special offer, so you will get only 13 rupees per bottle. And also, they use their name, right? So when they sell the product, right? Even though it's our product, they use their name, right? When they sell it. Then the total cost for the last month, 5.6 million, right? Total cost, out of which 1.6 were fixed. So therefore, you can understand. So total cost is 5.6, fixed cost is 1.6. So the 4 million is variable cost, right? So based on the above data, write a report to the board of directors stating whether to accept this special order and the other factors that has to be considered in making the decision, right? So that is very important. So you have to first say whether you are going to accept this special offer or not. And also, what are the other factors that has to be considered? So the first point is, right, so I'm talking to the students who haven't did this activity, right? So first find out the excess capacity. So that is 100,000 bottles. Clear? 80 equals to 400,000 bottles. So 20% is 100,000 bottles, right? Then the next point is, right, you have to find out because the criteria is what? What are the fundamental criteria to accept the special order? So whether the special offer gives you a contribution or not, right? So for that, you should find out the variable cost per bottle. So find out the variable cost per bottle. What is the variable cost per bottle? So others, not the group number 2, the others find out the variable cost per bottle. How much is the variable cost? Others? Ten, right, correct? So how do you calculate that? Because you know, 4 million is the variable cost. So 4 million equals to 400,000 bottles. So therefore, variable cost per bottle is 10, right? So give me 1 minute. Okay, so now you know the variable cost per bottle. So what you have to do is when you accept a special order, so you have to decide whether the special order gives you a contribution. So the special order price is how much? 13 rupees. So 13 rupees is the price that you get, right? The revenue is 13 rupees per bottle. So from 13, you have to deduct the cost that you have to incur, variable cost. So that is 10. So 3 rupees is the contribution. So therefore, from one bottle, you get a 3 rupees contribution, right? So for 100,000 bottles, you get 300,000 contribution, right? You get 300,000 contribution. So these calculations are, I mean, easy. But the issue is how we are going to present it to maybe the managers or the top managers. So that is very important. So therefore, you have to explain it very clearly, right? So the calculation එක මෙතන හරි ලේසියිනේ. ඒක issue එකක් නැහැ. නමුත් present කිරිල්ල තමයි මෙතන වැදගත් වෙන්නේ, right? So we'll look at how to present it, right? So at the examination also, you have to present it clearly, right? So let's look at this one. So these are the calculation, right? So you know, selling under normal price, selling price is 20. Current output 400,000, current capacity is 80. So surplus capacity, you can find out like this. So everything, so when you answer to a question, right, at the examination, so write these things, right? Because you will get certain marks, right? Maybe smaller mark, right? For these steps, right? කටුවට පොළවල හිම කරලා නිකන් අන්තිම උත්තර විතරක් දාන්න එපා, right? So you have to write these things, right? So maybe you will get 1 mark for this, right? So therefore it's important. So these are workings, right? Then you have to write under special order. What is the contribution that you get? Under present capacity, what is the contribution that you get? Right? So under special order, your selling price is 30. Present capacity, your selling price is 20. Then the variable cost is in both cases 10 rupees per bottle. So therefore, contribution per bottle in special order 3 rupees, under present capacity 10 rupees. Right? So contribution per bottle under special order 3 rupees, under current capacity 10 rupees. Right? So if you accept the special order, so your contribution increased by 300 rupees. Under present capacity, your contribution is 10 into 400,000 bottles, no? So 4 million. Contribution under special order is 3 into this 100, 300,000. So total 4.3 million. So what you have to write under the decision is, you have to say, so if you don't accept the special order, so your contribution is 4 million, but accepting the special order, your total contribution increased by 300,000, right? So now your contribution is 4.3 million. So therefore, so accept a special order is a wise decision, right? So you can say like that. But in the question, there is another part, right? So what are the other factors that has to be considered in making the decision, right? So that is important. So the first thing is, as you mentioned, so one student mentioned, so they are going to sell the product using their name, right? Supermarket sells our product using the supermarket's name. So there is a question about our goodwill. What will happen to our goodwill? Then the other point is, so here you didn't consider the fixed cost, but so if you accept the special order, maybe you need uh, another supervisor, right? So you have to pay for him, right? So supervisory salary is a fixed cost. So sometimes you may need to hire a machine to do the excess, the special order, right? So that is also another fixed cost. So sometimes if you accept the special order, so fixed cost may increase, right? Supervisors ලට ගෙවන්න වෙයි. Sorry. hire කරන machines වලට ගෙවන්න වෙයි. ඒ වගේ අපිට fixed cost එන්න පුළුවන්, right? And the other thing is, what is the other thing? So what will happen to our goodwill, then the fixed cost, and other thing is, so under the current capacity, you sell a bottle 20 rupees, right? So sometimes the current customers may ask more products. So current demand may goes up. So if you accept the special order, how we are going to cater your current customers or the normal customers? So that is also an issue. So those things you have to write down as other qualitative factors, right? So those are the things, but the presentation is very important. So don't write, unwanted things, right? Unwanted things in your answer, because it doesn't add value. It doesn't get, you don't get any marks for that. But you consume a lot of time to explain those things, right? To write those things. Because at the examination, so very important point is, right? So you within the time, right? Within the time, so you get only 3 hours, right? So you have to score 100 marks, right? So for one mark, you can spend only 1.5 minutes, right? 1.5 minutes. So therefore, always you have to think about the marks that you get for each question and decide how many minutes that you have to use for that, right? So if you write unwanted things, so your time, you waste your time, right? So that means you cannot attempt other questions. So therefore, based on the marks, you have to decide how many minutes that you have to spend, right? So using that minutes, right? Within that time limit, you have to quickly do your question, right? Clear? Okay. So I hope you got this fine, right? So write the qualitative factors as well. So I can't understand this question, Charuni. Can you talk, please?
Yes, madam. That I want to ask you, madam, that we have mentioned in that contribution and current variable cost and fixed costs like that. We find out in that answer, no, that each and everything we should mention in that our presentation. That means that point as a point, and that mean contribution like this, and that capacity to 80% is 100 quantity 100,000
Yes, that's important, because surplus capacity is important to decide how many, so up to which point that you are going to accept the special order, right? So that is because here in the question, it doesn't say how many units that you are going to accept under special offer. So sometimes you may get, so special offer is 50,000 bottles, right? So from 100,000 surplus, you only accept up to 50,000. So therefore, calculation of surplus capacity is very important. So that is a one criteria to decide whether you accept or reject the special offer, right?
Yes, madam. And one thing that when we are giving this report to the director board, we will consider only that positive thinking, or where we should mention the risk and other thing
Yes,
also.
yes, you have to specify other risk aspects as well. So that's what I told you. So if under normal condition, if demand goes up, so how we are going to cater our normal customers? So that is a negative thing, no? So you accept the special order, but if in case, if demand goes up under the normal condition, so we don't have excess capacity to offer. So those things, so that is a negative thing, right? So then you have to explain those things as well.
Okay, madam. Thank you. I got it.
Okay, so I'll give you a few minutes. Kalhari shared in the chat.
Madam, do we have a midterm section for the next month?
But I didn't get it clearly.
And the schedule of the timetable, impact program is mentioned, midterm test exam will be held on next month.
Yes.
So due to the strike, do we have
That is, you have to ask from the coordinator,
okay.
right? So ask from Ajit sir.
Okay, got it. Thank you.
So in the chat box, so you have to mark your attendance, right? So it will only open up to maybe 10, right? So therefore quickly mark your attendance, right? Here, students, can you see the attendance link?
Yes, madam.
Okay, so quickly mark.
Yes, madam.
So it will open until 10, right? So do it quickly. So I will give 5 minutes for that.
Madam, small issue. Yeah, last week, as a Kalhan said, we will get the lecture video from the recording. Since we didn't receive the recordings, how can we check with this one?
So this lesson, you mean?
Yeah, yeah.
So I shared it with Kalhari. So
Since we didn't get the LMS access, is there any YouTube channel on?
no. I asked Kalhari. So I'll check with her.
Okay, madam, thank you.
මේ කල්හරි අමාරු වාට ගිය සැරේ මේ යවන්නේ මේකේ රෙකෝඩින් එක. ඒක ළමයින්ට හම්බුන්නේ නැහැ කියන්නේ. ඔයා YouTube එකට දැම්මද? මගේ එක මම ඔයාලට ඊමේල් කරපු එක දැම්මනේ නේ. Group number 3. So first we'll learn about the theoretical side and then we'll move to the presentations. Group number 3. So can you please stop share? So first we'll look at the theoretical side, right? Okay, so dropping a loss-making product is the next one. So here it says when a company is producing, hope you can see. Can you see?
No, madam.
No, madam.
Dropping a loss-making product, right? So here it says when a company is producing a range of products which include the product incurring losses, business will have to decide whether such product to be discontinued. Right? So for an example, we'll say you are producing 3 products, X, Y, Z. So X is a loss-making product. So using CVP analysis, right, you have to decide whether this loss-making product should stop or not, right? So because they explain since it gives you a loss, you have to stop it. But using CVP knowledge, so you have to elaborate it further, right? So that's mean you have to explain whether the loss-making product gives you a contribution. Maybe it's a loss-making product, but if it gives you a contribution, you should not stop it, right? So that is the decision, right? So here it says, this decision can also be based on by comparing variable cost and selling price. So that's mean, in other words, determining whether the product is having a contribution. So product means the loss-making product, right? So that is what you have to decide, right? So there may be series of products, maybe 1 or 2 products gives you a loss, but using CVP knowledge, you have to decide whether the loss-making product should be stopped or not, right? So this is the question you have. So you can see X company has a range of products of which revenue and cost data are as follows. X, Y, Z. Sales 32,000, 50,000, 45,000. Total cost 36,000, 38,000, 34,000. So you can see in these two, these are profitable products, right? Profit making products. But this is the sales. Revenue is less than the cost. So this is the loss-making product. So the total cost comprises of 1/3 of fixed cost, making 1/3 fixed cost, 1/3 fixed cost, right? Fixed cost, the marketing manager of the company argues that product X is making losses. So ඔයගලන්ට තේරෙනවද මෙතන 4,000 loss එකක් නේ තියෙන්නේ. And hence it should be discontinued. The managing director of the organization seeks your advice on the issue. So it's very easy. So what you have to do is, you have to explain whether this product gives you a contribution, right? So you have to further analyze and tell whether this product gives you a contribution, then you have to say, no, we should not stop it, right? So let's look at the presentation of group number 3. Okay, so you can share with that, right? Okay, Diala, Shakila.
Yes, madam. Shall I present?
Just a moment, please. Okay, so shall we start from Maheshika?
Yes, madam. Uh,
Wait, may camera
could I?
on. Okay, right.
Okay, madam. So, as a short-term decision, organizations want to make a decision of whether we want to continue the product or not. When organization have a range of products, when one product making losses, organization has a strategic decision whether we want to continue or dropping or not. So when making that decision, we consider about the contribution margin of that product. When we consider about this range of products, this XY is that there are 3 products, and that product X making losses. As a decision point, we want to consider about the contribution margin of this. When we consider about the product X, it making loss of 4,000, and this is the way. So we want to use the contribution margin as a decision point to whether we want to drop a loss-making product or not.
Okay, so shall we
Can you hear me?
another person to present it? So can you show it again? Jayala, can you present it again? Because her line is not clear.
Yes, madam. Good morning to all. Our topic is dropping a loss-making product. Sometimes,
මේ camera on කරන්න. භාෂිනී එරන්තිකාද ජයලක් කියන්නේ?
yes, madam.
Okay. So camera on කරන්න. All right.
Sometimes when a business sees that a product is losing money, their first reaction is to that is shut it down. So we have to look for it carefully. As an organization, we can identify total fixed cost and variable cost as total cost. So organization can't control the fixed cost. In short time period, organization should bear it. Bear it whether the product produce or not. But we can avoid variable cost if we do not produce product. There is no variable cost. So in this decision, we should consider sales, revenue, contribution, profit in addition to variable cost and fixed cost. Shall we move to the example? In this example, when we consider about the profit and loss, we can identify X product has lost rupees 4,000. 4,000. So, but X has rupees 4,000 positive contribution. That means X products is covering all of its variable cost and part of its fixed cost, even though the product X is making loss. So therefore, we should continue the product X.
Right.
Thank you.
Okay. So so in your group also the calculations are okay. But when you present, so you can further elaborate this I mean, so you have to present to the top management, no? So from the calculations or from the presentation also, so it should appear, right? So whether you are going to accept or not, right? So therefore, you have to compare. You have to divide your page into two, and you have to say, if you continue, so this is the impact to profit. If you stop X, this is the impact to profit, right? So here it's you explain using only one slide, but you can divide it, right? So here you can avoid, so this is the total impact. So total impact is 19,000. So that is, if you continue X, then you can show without this X column, so what is the impact to total profit? So then the readers or the managers can easily understand, yes, this is the impact. If you stop the X, this is the impact. So they will understand it clearly, right? So your presentation, your calculations are okay. But when you present these to the top management, when you answer your answer script, right? So you have to be very careful, right? So I will show how to do that one, right? So this one, right? So here you can easily say, if product X continues, right? So as you shown in your presentation, so this is the figure that you got, right? So for others, not the group number 3, so I'm repeating, right? So first you have to show if product X continues. So then you have to show the sales, variable cost, and contribution. Then you have to take the total contribution and you have to deduct the total fixed cost, right? So not from each product. You have to take the total fixed cost, right? So how do you take total fixed cost? Because you know from the total cost, 1/3 is fixed. So therefore, you can add all the total cost, right? So here you can add all total cost and take 1/3 of it, right? So that's what I took here as 36,000. So total cost is 108,000. Then from that, 1/3 is fixed. Then you get a profit of 19,000. So if X continues, right? If X continues, so this is your workings. This is your answer, right? Then another page or another part, you can show if product X discontinues. If you stop X, you have these things, right? So you don't have this column. You have only these columns, Y and Z column, right? So the same things I have taken here, right? You can see 24,667, 22,333, right? Then you add these two figures, then you get 47,000 as the total contribution. Then from this total contribution, you have to deduct the total fixed cost. Even you stop this product, you have to incur the fixed cost, right? So therefore, you have to deduct this fixed cost, then your profit will be 11,000. So you can see here 19,000. When you stop X, your total profit is 11,000. So what is the gap? That is 8,000. So that gap is what you get through Z's contribution. So that's mean if you get a contribution from a loss-making product, so you can use that contribution to cover your fixed cost, right? So that's why you should not stop it, right? Because this contribution helps you to, right? Helps you to cover your fixed cost. So that's the gap you can see here. 19,000 11,000 අතර තියෙනවානේ gap එක. මේ gap එක වෙන්නේ මෙන්න මේ නැති වෙලා යන එක. Right? එතකොට you have to explain clearly, right? So we should not stop X because X gives you a contribution of 8,000. which you could use to cover your fixed cost, right? So then that is your final answer, but you have to clearly show these calculations. You have to present this way. If X continues, this is the outcome. If X stop or discontinues, this is the outcome, right? Clear? Clear?
Yes, madam.
Okay. Then we'll move to the next term. What is the next term? Make or buy decisions. Make or buy decisions. So frequently the management is faced with the decision whether to make a particular product or component or whether to buy it from outside. Right? Frequently management is faced with the decision whether to make a particular product or component or whether to buy it from outside. ඔගලන් දන්නවා ඇති සමහරක් විට අපිම හදනවා නැත්නම් අපි අපේ මේන් ප්‍රොඩක්ට් එක හදන්න සමහර කෑලි පිටින් ගන්නවා. Right? So to produce your product, so sometimes you buy it outside, but sometimes you make it in your factory. So you have to decide whether you are going to buy it from outside or whether you are going to manufacture within your factory, right? So that is the decision. Right? So here it says any purchase price payable to an outsider may be compared with any cost which can be saved unless the production is made. Right? So if you buy it from outsider, right? So you have to show how much of cost that you save because of you buy it from outside. Right? So that is how you have to decide whether you buy it from outside or make it in your factory, right? Make or buy decisions means that, right? Because you have to compare the buying price from outside you buy it. So you have to pay for that. So the outside buying price you have to compare with the cost that you save within the factory, right? So if you can save certain amount of cost, then you can buy it. But if you can't save, then you have to make it in your factory, right? So this is the question. A firm manufactures component XL200 and the cost for the production at current level of 50,000 units are as follows, right? Cost per unit 250, 125, 175, 350, right? So you can see raw material, labor, variable overheads and fixed overheads also there. Component XL200 could be bought for 775, right? So from outside you can buy it from 775, but if you manufacture it, you have to incur these costs, right? And if so, the production capacity utilized at present would be unused, right? So if you buy it from outside, right? So the production capacity, you don't need to use it, right? If you buy it from outside. As a result, 60% of the fixed cost could be saved. If you buy it from outside, you can save 60% of fixed cost, right? Decide whether XL200 to be manufactured or purchased. Show the effect on profit based on your calculations, right? So let's look at the presentation of group number 4. Give me 1 minute, right? So don't start, right? Give me 1 minute. Sorry, okay. You can, okay, so let's, can Mayura start? Mayura?
Yes, ma'am.
Then Mayura and Gayatri Chanchala, right? So Mayura, you can do halfway and stuff. Then Gayatri Chanchala can start from that point, right? So go to the presentation mode.
Ma'am, am I audible?
Yes, yes, yes.
Yeah. So the company is in a situation where they are going to decide whether the Excel 200 component is to manufacture in-house or to buy from outside. If company is going to produce the Excel 200 inside, they are having these costs that is sum up to per unit cost is 9. But if they are going to purchase that from outside, they can purchase Excel 200 unit for 7.75 rupees. But on the other hand, they can save 60% of the fixed cost, but still they have to incur 40% of the fixed cost. In our first working, we compute the total fixed cost, that is 175,000, out of which 60% we can save, that is 105,000. If we are buy this component from outside, we can still have to incur 70,000. That is 1.4 rupees per
So,
unit.
Mayura, are you explaining the question or are you explaining the answer?
I'm explaining the answer, ma'am.
So then go to the next slide. So still we can see the first slide. Right, okay, now we can see.
Yeah, apologies for the inconvenience. So I'll repeat myself. So if companies producing the component in-house, they have to incur these costs. That means raw material, labor, variable overheads, and fixed overhead. That will total up for rupees 9. But companies purchasing the component from outside party, they can take it for 7.75 rupees. In addition, they have to incur the 40% of fixed cost. That means 60% can be saved. The other 40% we have to incur. That per unit fixed cost that we have to incur if we are purchasing from outside, that is 1.4 rupees. So in our first working, we computed the fixed cost that has to incur if we are purchasing from outside. Total fixed cost is 175,000. If buy, we can save 60%, that is 105,000. That means anyhow we have to bear 70,000 fixed cost. In our working two, we compare the how much we can save from a unit if we purchase or purchase or produce in-house. For manufacturing in-house, per unit cost is 9 rupees, but to purchase from outside, we have to pay 9.15 rupees. That means there's a negative impact if we are going to purchase from outside, 0.15%. There are several methods to compute the answer, but we use two methods. In first method,
Mayura, you can stop, and the other student, which I mentioned, so
thank you.
he can start. Who is the other member? Go to the first slide.
Miss, she is getting disconnected during the bad weather.
Okay, so go to the first slide. Then I will choose another one. So Gayatri Chanchala is absent, right?
She is connecting, but because of the bad weather, she's couldn't.
Okay, can you do now, Santunika? Are you in this group?
Yes.
Okay. So please do the rest part. Your line is not clear.
Q1, we get I'm Santika. Here's to continue the presentation. We can by region. We multiplied by current production level is yeah, because I have a power cut. That's why. Sorry. Hello. Hello.
We can't hear clearly, Santunika. So any other student who can explain clearly?
Yes, ma'am.
Okay. So Ranjani, yes.
Okay. We use two methods to answer our question. In the first method, we compare the total manufacturing cost with the total outsourcing cost. Decide to which option is more profitable. In here, we consider variable cost as well as fixed cost. According to our calculation, total manufacturing cost is 450,000 rupees and purchasing cost is 457,500 rupees. In the second method, we consider concept of relevant cost. If we decide to make the relevant cost is 275,000 rupees. In here, fixed cost has ignored because fixed cost have to bear whether a product is manufactured or not. If we decide to purchase from outside, the relevant cost is 282,000. Here we consider purchasing cost as well as fixed cost saving. In conclusion, as our calculation based on both method, it is more profitable to manufacture the product rather than outsourcing. By manufacturing this product, the company can earn 7,500 profit. Thank you, ma'am.
So tell me, anyone from your group, so under the first method, so if purchase, you mentioned 50,000 into 9.15. So how did you get that part? $9.15 into 50,000?
Ma'am, 9.15 includes the 7.75 purchasing cost
Hmm.
plus the 40,000 fixed cost. That is 1.4 rupees per unit.
But don't show like, because normally we don't show fixed cost per unit, right? So in this question it shows, but when you calculate the under the CVP analysis, always you have to show the total impact of fixed cost, right? So don't try to relate the fixed cost per unit, right? Fixed cost don't, we have to show as a whole, right? As a total figure, right? So actually in the question it says fixed cost per unit is how much? 3.5. But when you calculate, when you show the profit, the impact to the profit, so you have to take the total fixed cost, right? So therefore, you can easily show this one, right? If purchase, you can say 7.75 into 50,000, and from the fixed cost, the total fixed cost is 175,000. No? From that, 40% is 70,000. So separately, you have to show that one. Clear? So don't absorb the fixed cost to this unit, right? Got my point? Mayura?
Yes,
Yes,
ma'am.
yes, ma'am.
Okay, so what is the question? මේ ඕගොල්ලන්ගේ මේ conversations මේකේ යවන්න එපා හොඳේ. Private ඒවා මේකේ මේ chat box එකට දාන්න එපා. Clear? I'll show the explanations. So this is how you have to show your calculation. So cost of manufacturing is 5.5. So without fixed cost, right? Purchase price is 775. So if you manufacture, right, the first method says 5.5 into 50,000, 275,000, right? Then if you buy it from outside, you have to pay 775 for 50,000. This is one. And also, if you buy it from outside, you can save 60% of your fixed cost, right? So this is the saving. So how do you get the total fixed cost? So because here the fixed cost is 3.5. 3.5 into 50,000. So total fixed cost is 175,000. So from 175,000, 60% is 105,000. So this is the saving. So if you manufacture, you have to incur this much. If you buy it from outside, you have to pay this amount and you can save 60%. So therefore, the net value is this, right? So you have to compare this one and this. So then you see, so this is less than this figure. So therefore, you have to, you can say we have to manufacture the component. So this is the first method. Then the second method, right? So we can think from the cost saving side. Cost saving side. So you know, if you buy it from outside, you have to pay 775. But if you manufacture, it costs only 550. So what is the gap? 225. 225. So 225 into 50,000, right? Cost saving, right? So if you manufacture in your factory, you can save this amount. මොකද හදන්න යන්නේ 5යි 50යි පිටින් ගත්තොත් 7යි 75යි 2යි 25ක් save වෙනවා. So if you manufacture in your factory, the cost saving is this much. But if you buy it from outside, the cost saving will be how much? From the total fixed cost, you can save 60%. So this is the cost saving. So you have to compare these two. This is cost saving side, right? So 112,500, this is 105,000, right? So difference is this, right? Clear? Okay. So if you, any method, right? So if you practice any method, so there should be a difference 775, right? 7,500, right? So here the cost saving is high when you compare with this. So therefore we have to manufacture it. So in first method, right? So you only consider the manufacturing. This is less than this, right? And also you can go with full costing method. So under full costing, so you can take 9 into 50,000, you get how much? 450,000. And 775 this amount, and you have to consider the 40%. 40% fixed cost you have to incur, not saving. So those two, the under full costing. So one side 9 into 50,000, 9 into 50,000. So full costing. So this is the full cost. So 9 into 50,000 is one amount. How much is the 9 into 50,000? Calculate and tell me. 9 into 50,000, right? So 50,000 if you manufacture, right? So you get one figure. So that is 450,000. Next. Okay, if you manufacture. If you purchase from outside, so 775 into 50,000. How much? 775 into 50,000 is make the same figure 387,500. 387,500. Right? So this is 775 into 50,000. And also, you have to consider, so if you save 60%, so that's mean if you have to incur 40%. You have to incur 40% of fixed cost. So that is 40% of fixed cost is how much? 175,000 only 40%, how much? Here then 70,000, right? So we have to deduct that one, 70,000. Mainly 175,000 total fixed cost again. Man, we come make calculations. making 40%, right? Making 40% ගත්තහම තමයි 70,000. Right? එතකොට මෙන්න මේකත් එක්ක compare කරන්න ඕනේ මේකේ impact එක. එතකොට 775 into fitting ගත්තොත් 775 into 50,000 මෙච්චරක් යනවා. මෙච්චරක් cost එක දරන්න මේ. Right? So therefore total is how much මේ දෙකේ එකතුව. How much? 457,500. ඔන්න මේ දෙක compare කරන්න. This is full costing method. එතකොට මොකක්ද? ඒතුත් අපි කියන්න ඕනේ this is manufacturing of this component is better. Right? So see the gap. So the same thing. So 7,500. 7,500. මේ වගේම තමයි difference එක. Right? Okay? Clear? So there are different ways of calculating it, right? So these are very simple calculations, right? So don't expect these type of calculations during your examination, right? So to explain the concept, we use these questions, right? So you have to understand these the theoretical backgrounds, the steps, everything clearly, right? So the questions will be a bit difficult than these things, right? Okay, any questions about this question or anything about short-term decisions? Okay, any questions, students? This is the last activity. So anything that you want to clear about CVP analysis?
Excuse me, madam.
Yes.
According to you, madam, that in this CVP analysis, we don't want to calculate unit per cost, fixed cost, no? In that, so that it is in that CVP analysis only, no? That means that unit.
No. So don't misunderstand what I said. But when you answer, when you give your answer, always you have to show the total impact of fixed cost. Because always in CVP analysis, we explain. So from the total contribution, you have to cover the total fixed cost. Right? So that's why. So always try to explain the fixed cost in total terms, right? So if you don't have information to calculate total impact, so then it's okay if you go with unit prices. But if you have information to calculate the total impact, right, then you have to show the total impact of fixed cost.
Okay.
Because always you have to calculate contribution per unit and multiply it by units and get the total contribution. And from the total contribution, you deduct the total fixed cost.
Okay.
Because the fixed cost is a lump sum amount, no? Because you don't link it with units, right? Fixed cost කියන එක අපි units එක්ක relate කරන්නේ නැහැනේ for a particular given period, right? So
Fixed cost.
I hope you can understand that.
Yes.
One. So earlier I explained. So in a particular given period, so the fixed cost is fixed,
Yes.
right? So within this range, your fixed cost is fixed, right? 100,000 hari ඕනම ගාණක් මේක fixed, right? මේක අපි units එක්ක relate කරන්නේ නැහැ. මේ 10 දී fixed cost එකත් එක සමානයි 20 දිත් එක සමානයි එහෙමනේ අපි කියන්නේ. right?
Yes.
Eka.
Okay, ma'am. Thank you.
Here, any questions? If you don't have any questions, we can stop at this level.